In this video, I'm gonna show you something that nobody, literally nobody is talking about, which could lead to most people being absolutely wrong about Bitcoin and a lot of people actually missing out and losing a lot of money. So there's gonna be a lot of very interesting news right now, and then we're gonna get into the pricing models that I guarantee no one is talking about. And this is, after watching this video from the beginning and until the end, you're gonna become guaranteed much smarter in the world of finance and the world of crypto especially. So without any further ado, let's just jump right into this. So when it comes to our short trade, so my short trade over on Bybit is still open, so it has a small profit on there. So it touched our entry point. There wasn't much volume, so I still kept it. But if it's gonna actually break, come back to it and actually break above my entry point, then I'll just leave it. So because me being Mr. Spot On, I don't really like to take huge losses. So therefore, this is what I'm doing. This is a quick update as to what I'm doing personally. And if you want to see all of our trades and the trades of my team, then go down into the description of this video or into the pinned comment and join our free Discord channel, because this is exactly where we post all of our trades, and the trade results of our members are absolutely astonishing. So if you're not part of this community, this means that you're missing out on some incredible trades. Therefore, go down below into the description of this video and join us right now. It's absolutely free, and all you have to do is join this VIP Signal section. There's a quick instruction of how to do it, and we just recently added Bybit to it as well. So go and join us right now and enjoy. Now let's get to some positive news first. I really like to give you guys the positiveness and then give you the reality. So first things first is that Bitcoin Mining Energy Initiative garners and receives support from New Hampshire governor. Remember what we saw happening in Texas. In Texas, they've been, Bitcoin mining and the adoption of Bitcoin mining actually helped their power grid. And this is what they're seeing right now also in New Hampshire. So how many more states are going to be jumping into this? And Texas is already laying a proposal for making Bitcoin, available for the government, so that actually the state could own Bitcoin. So this is really crazy. I mean, all in the darkness, in the shadows, all this crazy stuff is just taking place. And now New Hampshire is the new state to follow suit. So it could actually go viral in the next cycle, in my personal opinion. That's why a lot of people are saying that it could be a mega cycle. But before we get too excited, let me just show you some really crazy stuff. And before I do, there's one more interesting piece of news that we cannot ignore, and that is that National Australia Bank is about to launch a stablecoin based on Ethereum, and it's not a CBDC. We spoke about CBDCs before. Nobody's gonna buy that garbage, and all them, effects in and the actual experience of Nigeria and quite a few other countries that actually rolled out CBDCs and pressured people into using CBDCs. It didn't work. So as for all the reasons I mentioned before, it's obvious nobody's gonna buy something that is so centralized. So anyway, and right now Australia is actually going to be launching their stablecoin instead of a CBDC, and it's gonna be based on Ethereum and Algorand. So this is crazy. And this, guys, if this is not bullish for Ethereum and Algorand, then I don't know what is. So that's why I'm stacking sets not of just Bitcoin, but also Ethereum and a few other altcoins. Okay, so let's now move on to the reality. And I'm going to show you a pricing model that literally nobody is talking about. All right, so are you ready? Comment down below, tell me if you're ready to see it. So debt, well, number one. So it's going to just lead into it. So debt ceiling is the America's budget crisis of its own creation. So right now, we still have, as I mentioned in my previous video, if you haven't seen it, check it out. Here is a link to it. It's a very important video also, actually. So here, yesterday was the deadline for raising the national debt ceiling, and currently it's at $31.4 trillion. And right now, they actually need to make a decision. The Congress needs to decide to raise the ceiling or start cutting spending, because Janet Yellen, whatever, she's not going to be very happy, and she's going to have to start cutting stuff, and that's going to just trigger a downward spiral, just like I discussed in the previous video. So for right now, there is no resolution. They're just postponing it to the last second, I suppose, but I'm going to keep you guys updated. So subscribe, hit that notification bell so you're always notified when I make a new upload. And also, please join my free Telegram channel besides the Discord channel, because these are two separate things. All the links are down in the description of this video. Super useful for you as traders or investors. So right now, what this actually feeds the narrative of what I really want to explain. So let's first, before I give you the pricing model that could be more realistic than anything else as of right now, let's take a look at the models that people are looking at. And here is an example. So this is a logarithmic, growth curve of Bitcoin, whatever. This is just a available indicator on TradingView. It's called Brave new coin liquid index for whatever Bitcoin, and then you can actually add logarithmic regression weekly. So, and in this instance, we're going to see that, this has been our ultimate support, and, the price cannot go lower. So right now, our worst case scenario is standing at about $11,500. Right now, we got supported by this line. Now we're having a resistance right here at 21,500, which actually coincides with quite a few other resistances that I previously showed you in our more detailed analysis of the current Bitcoin price. So everybody's saying, well, just because we have this line right here, it's just the price is not going to go lower. So this kind of analysis and these kinds of patterns and models, and sometimes they work as they worked here, and the bottom of the COVID, somehow it worked out as well. And all of the times people are basing their bullish and hopium predictions based on these kinds of models. Now, let me, and this is great and fine when it works out, but right now, let me give you a pricing model that is not all rainbows like this fucking thing. So let me show you something that is the reality right now. Understanding this situation, considering that we're still staring down the barrel of a recession because the interest rates are very high, but the inflation is starting to go down really slowly. So there's still a lot of risks as of right now, even though I don't mean to spread FUD, guys, I apologize, but it's just what it is. So let me give you something interesting. Before we move back to the chart, let's take a look at this. This is the history of all major drawdowns in the history of the S&P 500, starting with 1955, and then this Eisenhower recession, Nixon recession, credit crunch, oil crisis, etc. And what's interesting? That right now, this is actually a little bit outdated. It's like 2021, but whatever, just still feeds the narrative. So we will see that right now, and actually we're currently even higher in S&P 500 because this is like 3,000. We're actually higher. We're somewhere up here, which is ridiculous. I mean, looking at the historic performance of S&P 500 and understanding that every single major crash was much bigger historically than the one that we're currently seeing. So before we move to the chart, and before I'm going to explain exactly what this whole thing means, let's take a look at this thing. This goes as far as the time when Nixon took the dollar off of gold standard. So basically all the history of major bear markets, and we're saying that in 73 we have 48% drawdown, 27% drawdown in 80s, and then 34% drawdown, 20%, 50%, 57%, 34%. And here, actually, guys, this is the COVID crash. So we cannot really, say that this is of any relevance, because guess why? Comment down below if you know exactly why. Because United States started printing money and supporting the government, and supporting everything. So therefore, this is irrelevant at this point, quite frankly. So they actually stopped it. And right now, and this is the reason why we have so much inflation right now. So this also having, minus 22% is just a joke. And now we're getting into the pricing model you have to actually understand. Historically, we've seen huge drawdowns and much bigger drawdowns that we're currently seeing in the S&P 500. Let me just remove this indicator from here. And we're going to see that as of right now, it looks quite bad. Yeah, I mean, we're going down. We have this wedge. But if we're going to actually measure the drawdown that currently we're having, it was at the peak, the bottom peak, it was about 27%. But quite frankly, guys, let's go back into the history and let's see what actually the history has told us previously. And we're going to see that the model, when it comes to recession model and the terrible economic environment type of a model, which we actually are seeing right now, a lot of the metrics, like the inversion of the yield curve inversion, etc., that I've been showing you on this YouTube channel, is looking actually worse than before the crash of 2008, the collapse of the housing market. So there are metrics that currently are looking much worse than 2008, guys. So it is pretty painful. And in 2008, once again, what was the drop? 57%. The same thing if we're going to take a look at the previous one, dot-com burst bubble, it was 50%. So 27% is painful, but it's not as painful as it could be. And as of right now, we could be standing somewhere actually on this verge right here, because we also had this, look how interesting, we also had this spreading wedge, and they were like, oh, this is the bottom, because everybody was screaming, we already went down like 25, and look, also about 25%, but it doesn't mean that. And then actually, when the United States went into a recession, we saw another major drop of about 40%. 8%. So this is a model which is actually a lot more likely to play out as of right now. And this is what we're currently, that's why we're seeing so much weakness in this price right here, that we were hoping for it to actually break out finally with this kind of a cup and handle bullshit pattern, but it's actually getting rejected. So it's a huge weakness as of right now. And this is what you have to be paying attention to, understanding that there is always a major recession. At least if we're going to take a look at this model, this is also a model. So we were seeing a recession almost like every 10 years or so. So if we're going to go back to the chart, we're going to actually realize that we've been overdue for a huge correction, a huge one, a real one, for a very long time. And what happened during COVID? Yeah, we had this shutdown, but then they turned the money printer back on, and then we just went up. So and now it's time for us to pay the price, which means that could they just turn the money printer back on again and just forget about inflation and just keep digging this insane hole of this US debt far beyond 31 trillion, 60 trillion, 100 trillion? Who cares at this point? Is it possible? Yes, but you cannot afford to not understand what I just mentioned in this video. So if you've enjoyed it, hit that like button. Check out this tutorial to Bybit so that you know exactly how to trade properly on this exchange with proper risk and money management. And with my exclusive link down in the description of this video, you can claim up to $30,000 in initial deposit bonuses. So enjoy that, and peace and love. Thomas Krallo. Stay smart, stay rich, and I'll see you in the next video. Bye-bye.